we'll touch on that today. Let's save that deal. So, all right, here we go. All right, it looks like we're live. I'm going to go ahead and share the sound. Hopefully I share the screen. Hopefully this one goes through this time. And we've got here, we've got, aha, here we go.
Are you telling me that you have a way to defer the tax situation there? Is that what you're telling me?
Yes, absolutely. Yes. And so the first one I was referring to is a 1031 exchange, which only applies to investment real estate. The second one I'm referring to is called a deferred sales trust. It works for primary homes. It works for investment real estate. It works for highly appreciated public stock. It works for private stock. It works for collectibles, artwork. It works for Bitcoin, cryptocurrency. And it's literally, I think, the best kept secret. And not only that is it's new to people, but it has a track record of thousands of closes now, right? At over 25 years, 15 times no change IRS.
My mind was blown, and it's too good to be true. It's too good to be true. My CPA would have told me about it. My commercial broker would have told me about it. No, we didn't know about it at Marcus & Millichap until 10 years ago, and now we know it.
But I'll tell you, you made me a believer when we got the wire from our mutual client who made this work. And it was a real eye-opener to see that there are ways that people can use the regulatory framework, if properly structured, to invest 1031 exchange dollars in things that you would not think were like kind to what they exited from. So it was very impressive. I got to say, you are the first one I've seen pull this off, and I'm pretty what do you call it? Hesitant to believe in a lot of these kinds of things. So it's a major feat for me to say, wow, this actually really worked, and it was really cool.
So using the Deferred Sales Trust allowed them to hold on to those assets. I mean, obviously they're, the legal structures around them, they're not in their names, but now that chunk of money is a cow in their farm, a really nice cow that does some really amazing things tax-wise and allows them to get the income that they need in order to meet their expenses. It's going to extend the length of time that they're going to have income by a pretty wide margin.
1031 is a way to shelter your income when you sell the thing. The DST is a way to avoid the 1031 and not have to suffer the time penalty and free up your hand to negotiate at whatever time you figure is appropriate. And it allows you to sit on the sideline, or it allows you to accelerate when needed and accumulate your capital.
So I found you, just so your listeners know, on a podcast, and I'm like, wow, this guy is really leaned in. He's articulate. He's very smart. When I worked in 1031 exchanges, we didn't really talk much about DSTs. We just used them to sort of round out a 1031 exchange. And I never knew that it could be the only solution that you need for a primary resident to take, their capital gains and defer it and put it into another property. That was like mind blowing for me to understand that concept, which I learned on the podcast that you were on.
Over our career and during different tax periods, we've seen, these tax avoidance, tax minimization, offshore, all these different strategies undertaken to minimize or avoid taxes. And then I can tell you that, some of them are just not worth the trouble. And so I was skeptical. Admittedly, I was skeptical. I thought, oh yeah, here we go, another one of these, right? And then they say, no, it really is different, right? So look more closely. We looked more closely. We had, honestly, 2 years of conversations. 2 years. Now we were being due diligence at the same time that we were doing due diligence, but 2 years is a long time to be, sort of flirting with the idea of and getting to know the people and getting to really understand the transaction. Yeah, long story short, we got comfortable, although we are not tax attorneys, lawyers, or estate planning attorneys, that at least, from an investment perspective, that, it made sense to sell a highly appreciated asset, get liquid, hold that in this type of a deferred or installment sale type of instrument, and then just be in a position then to do the most important thing. I'm probably stealing your next question, which is time. They say, well, you can't make more time. You can. The Deferred Sales Trust, in a way, allows you to lengthen the investment time horizon for those assets after getting liquid, but before having to feel the tax impact. And from an investment manager's perspective, time horizon is the most important element in investing.
Yeah, so I'd say be early and connect with us and just clarify your vision for what you want your wealth plan to be. And that's just not just your wealth, but that's your time and your energy. That's where do you think the market's at? Like, do you think it's a buyer's market, right? Do you think it's a good time to buy? Do you think it's a good time to be in debt? And if so, just keep buying real estate right now. But if you think it's not, and perhaps you want to wait on the sidelines and have some liquidity, get out of debt and wait for what we call a deal to hit you over the head, then that's why you would use the Deferred Sales Trust, regardless if you're a baby boomer or if you're a professional. But essentially, if you connect with us, we're going to help you map out a wealth plan. And as part of that wealth plan, we're going to write a line down the middle of a piece of page, and we're going to say, continue as you are with the 1031 exchange, or continue as you are with the Deferred Sales Trust, or a mixture of both. And we're looking at all of the pros and cons side by side, and then let you decide what's best for you.
All right, I want to officially welcome everyone to another kind of episode of the Capital Gains Tax Solutions podcast, as well as our Friday 10 a.m. PST Crypto Capital Gains Tax Mastermind. We're talking all things Deferred Sales Trust, all things cryptocurrency and real estate and investing. So our vision for this mastermind is to kind of demystify this thing called a Deferred Sales Trust and help you make a clear decision should you be selling your highly appreciated asset, in particular cryptocurrency, right? This is something where we feel is at the forefront of helping those who have highly appreciated coin that want to maybe get some cash flow, want to get some more traditional investments, want to get on the sidelines and not be subject to such huge gains and huge crashes, right? And be able to again, escape feeling trapped by the capital gains tax. So our vision is to take the real estate side of things, the crypto side of things, the traditional financial advising and security side of things, and have the Deferred Sales Trust in the middle and unlock this tool for you so that you can create and preserve more wealth. I'm here with my co-host, Jake Muller, who is a financial advisor out of the state of Utah. He has trained and coached CPAs. He is an expert in all things securities, also is very well versed in all things wealth building. Jake, welcome to another week here. How you doing, Jake?
You know, Brett, it's always a pleasure to be here. It's always an exciting moment to help people demystify that which is mysterious to them, that which is unclear, murky, what have you. They have money, they have assets, they have gains, they don't know what to do. And so here we are to help shed some light on their options. Again, most people end up making poor financial decisions, not because they choose to make poor financial decisions, simply because they don't know what their options are. So that's why we're here.
Perfect. Well said, Jake. So we really cover kind of three things during these masterminds. And by the way, sometimes it's just Jake and I, sometimes there's 5, 20 people and they're asking questions, and we'll see who pops in during this next 30 minutes or so. But there's really 3 topics. We talk about the vision, which we kind of laid out for you. The second part is kind of the deal close story of the week. And then the third one is kind of where this cryptocurrency world and capital gains tax solutions is kind of combining with this Deferred Sales Trust. It's all happening in real time. And if you go back, I think we've had 6 or 7 of these now. You can see we're documenting our journey to the first ever cryptocurrency Deferred Sales Trust deal. It's never happened before. And we're really excited to be at the forefront of this because it's happened for real estate, it's happened for businesses, it's happened for LLCs, S Corps, partnerships, it's happened for high-end primary homes, failed 1031 exchanges, artwork, collectible, public stock, private stock, but it's never happened for cryptocurrency. We might have an announcement for today here in a few minutes about the first one. But in the meantime, I want to touch on a deal close story, Jake, that is happening right now, and it's closing today. And it's for a couple who was in a 1031 exchange, and they're out of like Arizona, and they found a partial 1031 exchange, and then they had some leftover amount of money. Now, this money was right around $500,000, which typically wouldn't qualify for the deferred sales trust because we typically want $1 million net proceeds, $1 million gain. However, they're doing a second business sale that's coming up in the next 6 to 7 months, which is going to be able to combine with their other proceeds to make this thing work. And so, but their biggest thing was they were facing with about $150,000 of tax on about $500,000 of net proceeds sitting at the exchange accommodator. And so we're able to save that portion of the 1031, move it into the deferred sales trust. They're very happy, very excited. But it wasn't without its, challenges as well. Every deal has a little bit of challenges, things to work through. Timing of their first 1031, clarifying the deferred sales trust. What's unique about doing it via the 1031 exchange, it does give you a little bit more time to make a decision on the deferred sales trust. Remember, 1031 only works for investment property, but it's working for them on this one. The other business sale, they're not going to be able to do a 1031, so they have to do it prior to. And so that will be the deals closed story of the week. They are a younger couple, and they have lots of earning potential. They are going to be delaying some of the payments because guess what? Their income is doing just fine right now. So that is the deal closed or story of the week. Jake, what are your thoughts there?
I think it's a wonderful thing. One, mentioning that it's a young couple. They have a lot of earning potential ahead of them in the future. They've now established for themselves a financial tool of which they can receive future what would otherwise be considered capital gains type transactions into the deferred sales trust. So they are well set. They have this new foundation underneath them, this new financial tool that can assist them with a variety of projects in the future, not just one. So, going back to the 1031 exchange, that's usually a transactional per transaction type of a deal. Here with the DST, it's a lot more flexible. It doesn't always have to be like-kind property. And this young married couple, moving forward, they've got this wonderful tool that they can utilize again and again and again going forward based on the future types of capital gains type transactions that they might incur.
Yeah, and to add to that as well, they're going to, once it's in the trust, they're going to be buying some real estate of their own and doing some additional deals. So, which is cool, right? So instead of paying about, with Arizona, it's actually pretty favorable. I want to say they're around 25 to 30%, right around there on total, versus California is typically around 37 to 40, right? Just depending on the depreciation recapture amount. It's pretty favorable in Arizona. But of course, if Biden doubles the federal capital gains tax rate, we'll just go ahead and add 20 to both of those things because that'll be federal, which is big. But yeah, they're going to go ahead and they're already going to invest the funds. Now they have an extra, let's call it 25 to 30%, right, on that amount from what their gain was, which is exciting for them. And if you think about that, that's time. So in the very beginning, a gentleman said time horizon is the most important aspect in wealth planning, right? And if you think about that, he goes, they say you can't create time. Well, and he says, well, you sort of kind of can if you can stretch out what you would have paid of tax and allow that to compound and build and then allow that to pay you. But more so than that, guess what? If you can earn more today, guess what? That means you have to earn less. You don't have to earn as much tomorrow, which means what? You probably don't have to work as much tomorrow, which guess what? Means you have more time, right? More time, more energy, less stress, to do what you want to do with your life or to give to the causes you believe in and to have cash flow and to have multiple income streams. And that's what the deferred sales trust allows you to do, not only to defer the tax, but put it into multiple assets such as stocks, bonds, mutual funds, cash flow and producing assets, and use time on your side. Because by the way, there's time to be liquid and diversified and I want Jake to touch on this here in a second. And there's a time to go in on real estate, right? And sometimes it's kind of the polar opposite, right? And it's like, how do I get safe and protected and wait on the sidelines and get out of debt? And how do I go into real estate when it makes sense? And so Jake, just touch on that, the ability to use, securities, traditional securities in a safe manner, conservative manner, maybe hedge and protect a little bit, right? Maybe some put options. Just touch on just the strategy there, especially even for a crypto person, because a crypto person might say, well, Brett, that's great. I'm selling my crypto here for $7 million, which we're going to be talking about a new deal story that we're working on right now, Jake and I. And I don't want to just go buy real estate, go buy stock high. So like, Jake, what can I do in securities? How could I be protected there?
Absolutely. So, several questions all together in one. I think a lot of it comes down to being able to manage your assets from a global perspective. And when I say global, I'm talking about the fact that a lot of times people receive advice on only just one part of their financial life. They go to a very renowned advisor, what have you, CPA, attorney, whoever, and they are pinpoint, laser focused into just one area. And oftentimes we miss out on the well-rounded and comprehensive advice that the client actually needs. I've actually instructed not only CPAs, but financial advisors on how to provide balanced advice. And a lot of that means whether or not you derive a fee from what you're providing advice on, you at least need to take it into consideration. Case in point, back in 2012, here in the state of Utah, there was a precedent court case amongst financial advisors, a very large firm. They had maybe 80 or so financial advisors. They were sued and they lost because their financial plans did not include long-term care. All right. So my point being made is that we need to take into respect whether we participate as an advisor in such things and whether we derive a fee from them. We at least need to bring it to the table for the client and help them understand the balancing or the proper moving in and out of different asset classes. That could be crypto, that could be life insurance, that could be marketable securities, that could be real estate, that could be art and antiquities, that could be a lot of different things, right? And to your point, Brett, from a time perspective, you have perhaps more sophisticated financial advisors that are able to help the moving in and out of short-term investments. I say more sophisticated because this isn't just set it up and leave it type stuff. Usually for corporate investors, they have short-term money management accounts, corporate accounts that, you know, this money has a future objective that is maybe 9 months down the road. It might be we have to pay taxes with this money. And a lot of advisors run away from, well, that's too short of a time horizon. I can't do anything, right? Or they just don't know yet the things that are available, what they can help clients with on how to manage those assets. And so at the end of the day, to your point, clients may have future objectives. And it might be, I want to have money available. It needs to be liquid, invested, so that I can be making the 4 to 6 to 8%, whatever it is, and have it available within 3 days notice to go and make that real estate deal if they want that fourplex, that multifamily unit. Same thing in mind. They may want it available. They may want to earning something so it stays ahead of inflation, but they want it available for when that Ethereum goes down again so that they can double down and ride it back up. Or perhaps we're in the process of building a token set with underlying derivatives from other cryptocurrency. Fantastic, let's do that, whatever, right? But let's make sure that it balances in line with your other assets and your goals, objectives, time horizon. The thing of it is we don't want to do accidental investing. We don't want to do whimsical investing. We want to make sure that everything has a purpose, and its purpose has a time horizon, and it is for whatever objective that we have established through an investment plan. The investment plan needs to take into consideration all global assets of an individual, including their business interests. And we need to understand certain things like credit risk. We need to understand investor profile, risk tolerance. We need to understand political risk. Right now in the United States is a lot more shaky than it's been perhaps ever before. Well, in the last 20, 30 years. And there's just a lot going on that we take into respect when we sit down with a client and we talk about tax implications. Brett brought up something incredibly important. Right now, an individual with this young married couple with a DST, what they have available to them at their fingertips is the bulk majority of their entire, which would otherwise be taxable transaction. Because of the DST, it's not taxable. So instead of investing with net of tax dollars afterwards, they're able to deploy the bulk majority of their funds and do more with that. They're able to, it's kind of like, I've got this trip I'm going to go on, and I'm going to take a plane, and the plane's fuel tank is now full. It's not just partially full. It's not just, mostly full. It's not 70% full. It's all the way full. whether or not I need it to be full or what have you. Now I can take a longer trip. I can go to more locations. I can have more stops, however you want to compare the situation. We're able to do more with our clients' money because we have more of it to work with. And that allows them to accomplish more goals and more quickly reach their objectives. And so that was a multi-front answer to your question, Brett. I hope it was satisfactory.
It's a great answer. I want to pull out some golden nuggets there for sure. And I thank you so much, Jake. And one of the things I think about is tax flow versus cash flow, right? And it's so important to be on the right side of the quadrant on both sides, right? Not just, if you read the Rich Dad, Poor Dad book, talks about the 4 quadrants, right? The left side versus the right side. Well, it's the same thing with taxes, right? You need to have another quadrant to say if and when you're going to be paying tax, when you're going to be paying tax, what's your time horizon. And I think I want to pull out some other golden nuggets. You said global perspective, right? Macro versus micro. And this is what I love about the Deferred Sales Trust is there's multiple members of what I like to call, we want to help be a part of your dream team, right? Your dream team of experts. We all have our niche focus and expertise. I'm the trustee. Jake's the financial advisor. Then we have the tax attorneys that are like the brain surgeons that do all the legal work, right? We work with your CPA. If you have another financial advisor and you want to run ideas along with us, right, to help we welcome that, right? We welcome that. But we're looking at this globally, not only for your entire net worth and your lifestyle and your needs and your wants and your age and all of those things. But we're looking at the global perspective of your actual wealth itself, right? And how do we derive balanced advice across the board? It's not just one superstar, right? Who has one focus of niche. The cool thing about the Deferred Sales Trust is it necessarily requires separate entities and separate companies to perfect this. In fact, as a trustee, I am not a financial advisor, nor can I be a financial advisor in the scenario of the Deferred Sales Trust. Likewise, as a financial advisor for Jake Miller, he cannot be a trustee, right? We are separate necessarily, and same thing with the tax attorneys. They can't be either of us as well. So I like to say it's like the balance of power, as you will, a balance of responsibilities is a better way to put it. You have the 3 branches of government, and it's kind of like this as well. But the key thing is you or your spouse or whoever you are, you're the chairwoman or the chairman of the bank, and we're coming to you with hopefully some great opportunities, some great global perspective, right? Balanced perspective for multiple specialties. And the cool thing is, again, we have an extra 30 to 50% sometimes, right? And again, if Biden goes 50 to 70, that's how we're able to do this. So you win, we win, there's enough to go around. Whereas if you're a financial advisor who's advising post-tax, guess what? That's potentially 30 to 50% less to work with, right? Which means perhaps he can't bring in the experts on commercial real estate like my background and then Jake's background as well, helping CPAs, right? And a financial advisor, and then the tax attorney. So anyways, I think that's a really good point you bring up there. And then you also said balance in line with goals, objectives, risk tolerance, and time horizon, right? Making sure we understand that. And let's not do accidental investing. Let's do global intentional planning. Is that a fair summary, Jake?
Correct. Yeah. Conscious, deliberate decisions so that we don't leave our financial future to good luck and chance.
Perfect. So now let's shift to the third part and final part of our show. And it's hey, good news. This is really cool. You guys ready? Officially the first coin has been moved or transferred is a better way to put it into a deferred sales trust. Can I get a round of applause, everybody? A round of applause. So this is big news, right? Again, go back. It took a journey to get here. Now, I want to be very straightforward. It was like 25 cents because we're getting the juices flowing, right? Ethereum, there's a certain target number for this particular client. It was at 4,000. Do we wish we would have had it set up 5 months ago at 4,000? Yes. Is hindsight 2020? Yes. Does he wish he would have found us earlier? Yes. All of those things. Yes, yes, yes. Be that as it may, we are now officially after a lot. I would say we started setting up the trust about 3 months ago. Okay. And we didn't actually, we worked through it. We probably set it up about really 90 days ago, 70 days ago. Right. And now we're finally got the first coin in there. So again, if you go back to last week's episode, we do talk about being early, and we do think it'll be much more seamless this time. But it officially opened last week, and then this week we officially moved the first point something of the coin over. It was funny because he actually sent one first, and we were live doing it. Like, we had a Zoom screen share. He's like, Brett, I want to see this thing live. I'm like, cool, let's do a Zoom screen share. So I'm on there. I'm clicked in there, and you see it. He goes, okay. And he showed me like his token key that he had. He's like, okay, so this is the key here. He's explaining it to me because, to be honest, Jake and I are not crypto experts, right? We are financial, commercial real estate, deferred sales trust experts. It takes a team, and he understood that. I'm like, Peter, you are the expert. He's been in the industry for 20 years. He's the one who bought Ethereum for a very low price. And it's worth a lot. And so by the way, he's okay with using his first name because he says he's likely to come on and tell his story here. So look for that as like kind of a prequel, and I don't know when in the next near future he'll be on. And so he's like, hey Brett, yeah, here it is. And he's explaining it. He goes, here's the code here. This is how we protect it. We got all the security in place. We got the 2-factor authentication. We got it all set up. Boom, boom, boom. Okay, I want to make the first transfer. And then he clicks it, and we sit there and we're waiting. We're like, and then nothing, Jake, nothing. We're like, what happened? I'm like, let me refresh the screen. He's like, usually it's instantaneous. And then he goes to this website. He's like, this website shows all Ethereum blockchain trades. He's like, it's on there. This is the whole beautiful thing about, blockchain and the technology. He's like, everything's recorded. He goes, let me go check over there. And he goes, no, it's right there. It says it went. And you gave me the exact key, and all that stuff. And he's like, huh. I don't know what's going on, So we were perplexed. So we waited. You're like, well, let's go to something else. We come back in 20 minutes. We're still going through some stuff. And then he's like, no, still not there. He's like, oh, that's weird. He goes, well, maybe just wait till tomorrow. So tomorrow comes around, same thing, still not there. So now I'm kind of like a little bit nervous. Like, what? This is weird. Why isn't this working? We thought we were here. And then he looks in the very small print and he's like, oh, it has to be at least like 25 cents worth of Ethereum. Like he sent like 5 cents. And so like, and so he's like, hold on, Brett. And he did it. And then he sent it, and then it was instantaneous and it was there. So officially 25 cents of Ethereum, which who knows what it's worth today. It could be, who knows? It could be worth 30 cents, big money here. It's in the Deferred Sales Trust. So Jake, with all that being said, any nuggets you want to pull out of that one?
Well, and I would add that we've had clients with Deferred Sales Trust that have moved other assets like business shares and things that have kind of indirectly, they hold crypto and different things. But to your point, now directly underneath the Deferred Sales Trust and having a wallet, digital wallet, and actual transferring of cryptocurrency directly in the name of a Deferred Sales Trust rather than in an underlying entity that's owned by the Deferred Sales Trust. This is kind of an exciting thing because it shows that some of these larger corporations, and I say institutions, Kraken, Gemini, some of these others that hold or have wallets that hold crypto, that they are acknowledging the Deferred Sales Trust, at least as a qualified entity to receive the coins. And so this is the monumental everything that we're talking about here, in the fact that what usually takes some people a very long time, we talked about 3 months, everything else, has actually been moving rather quickly with the Deferred Sales Trust because they look at it, they have their legal team, review it, and now they view it as any other business entity that can hold a digital wallet, and that gives us a certain degree and level of comfort knowing that every new institution, every new entity, every new person that vets and that looks at the history of the Deferred Sales Trust and reviews the fact that it's got a 100% track record and everything else. It's just one more little checkbox or one more little accolade that we can add to our, testimonial box, so to speak, that, hey, this works.
Exactly right. Thanks so much, Jake, for sharing that. And with that, we're going to talk a little bit about a new current deal that is actually live as of this week. In fact, and we want to thank our listeners for sharing and or watching this and being a part of the mastermind. Because they found Jake and they found me. And so Jake, talk about that conversation you had with the gentleman who's considering using the Deferred Sales Trust for the first time for highly appreciated cryptocurrency.
Very good. And I want to bring up that he watched the video of ours, just this last episode that we had, where I was in the back of an Uber. And so here I am.
Somewhere in Colombia, right? Where were you?
No. I was in Texas. So not so far away, but I was in the back of an Uber and we were sitting here doing the same broadcast that we have. He was very interested in what we said, had called in, asked several other questions, had what I thought was going to be a 5 to 10 minute conversation, ended up being more like 40 minutes. This individual is a computer programmer and has a very successful business, but on the side, he's been investing in mostly Ethereum. And, whether it's one crypto or another crypto, the point being made is that based on when he got in and the various trades that he's had throughout, he has a substantial gain. And, everybody's investment objectives, we don't really want to go into so much each individual person's goals, dreams, and objectives here on this podcast call. But needless to say that he's looking to have tens of millions of dollars in gains. And it's rather substantial. And we had a very exciting conversation about the legitimacy of the Deferred Sales Trust, what tests it's been through, how many times the IRS has analyzed it and looked into it, what is the role of the trustee, what is the role of the financial advisor, and how accessible we are. I mean, what does it mean to have these two new people in his life to help manage a deferred sales trust? Very intellectual, very grounded questions as well. This individual was a good mix of everything. Very likable fellow, has a very young family getting going, and so just kind of perfect scenario for everything that we discussed with a deferred sales trust. This likely will not be his only transaction. So crypto, right, brought him to the table, but his business and the things that he does for work likely would produce similar taxable events in the future. And so now he will, just like this other young married couple we discussed at the very first of the call, this individual, which was a new contact from this week, likely will have several transactions over the term of which he has the deferred sales trust. So very exciting to talk about how we would interact, what my role is, and how, as if I'm a corporate investment advisor, moving money in and out of marketable securities to provide liquidity for future deals into what we consider hard or at-risk assets. And so moving from various levels of liquidity, various levels of soft assets into hard assets, back and forth as he brings more money into the deferred sales trust from other taxable events, other events that would otherwise be taxable, so to speak. And then just helping him manage cash flow and deals, and reinvesting through the deferred sales trust in more businesses. Very exciting conversation, very, very fun individual. And that's, Brett, one of the things I want to bring up is through the deferred sales trust, you and I both meet people that we enjoy working with. We meet people that need us and our expertise, but at the end of the day, a lot of them are just really good people that now need this new executive team, and I call it an executive team, you and I, the trustee, the financial advisor, helping them manage this entity, this deferred sales trust, that can help them going forward have a continual deferral of assets that are put in based on how it's managed. And so it's an exciting time to meet new people from all over the United States that have business interests throughout, as well as, one thing might bring them to the table, that we're able to, from a balanced perspective, help them manage several types of assets.
Yeah, that's beautiful, Jake. And I'll just piggyback on that. That is it's always been my favorite part, learning the story and being able to be a part of something larger. I'd even say, besides just the clients, well, the deferred sales trust is even larger than that, which is a beautiful thing to be able to work together with folks. Like, for example, Peter, he's officially, part of the sale was officially to be able to retire from 20 years in the corporate Silicon Valley world. And now he's going into the crypto space. And part of what he wants to do is take the deferred sales trust once he, gets fully closed and fully, behind, totally, he already is really comfortable with it. He's in it, but he wants to be, have that testimonial for a year or whatever. Then potentially roll it out, right? And help all of these people that are in his world, right? And likewise, that's kind of how I started out in commercial real estate. I took this to the commercial real estate syndicators and brokers and owners. And Jake's taking it to his clientele, business owners, commercial real estate owners, other folks that have highly appreciated public stock, and even cryptocurrency. So we're all bringing this thing to our individual spheres and unlocking this and giving this tool and sharing this tool. And we like to say that by the time you go through the due diligence with us and in talking with ourselves and with the tax attorneys, you will know this so well that we said, kind of joking, that you could sell it, right? And we want that, and we do that all at no cost, no obligation due diligence, right? We want to make this as simple for you and understanding and make it very clear and understandable for you, and digestible is a better way to put it. But it's like riding a bike, right? And you've never rode the bike with Jake and I, and we've been riding it for a while, and we're going really fast, and you gotta get on and you gotta start pedaling, and it might be a little bit wobbly, but we're going to be with you every step of the way. And as far as accessibility, absolutely. Jake and I are accessible. We're one click away from being scheduled on a Zoom call, a phone call, a text, an email, whatever your preferred method of communication, as well as these masterminds, right? Where you can invite your, friends, family, if you're a business professional, clients, if you're your CPA, whoever, have everyone come on and we chat and have questions. With that, we do have a visitor here, and I will just have him. He doesn't have to say his name, but if he does have any questions at this time, I will open it up for the gentleman. I'll give him 10 seconds, and if not, no worries. You just can listen in, which is cool too. We don't mind seeing the black screen and the mute. That's totally cool. But if you do have a question, you can always put it in the chat, and you can also just unmute yourself and talk. But yeah, Jake, well, maybe we do. Here we are. Mr. Clint, how are you, sir?
Yeah, I'm good. I gotta apologize. I'm driving through Montana right now in the RV, so I just making sure I've got enough service.
It's good, Clint. But first of all, I love the glasses and the hat. I love the colors of the red and the yellow. And then the fact you're going through Montana. I was just in Laramie, Wyoming, and I heard they're pretty close to each other, right? And people are they're debating about which is more beautiful, Wyoming or Montana. So let me ask you that, Clint. Which one is more beautiful? Would you settle that debate for us?
Montana is more beautiful. Wyoming's just windy.
Awesome. Well, do you have a question for the day? And we were happy to answer or to discuss it, or even just thoughts. It doesn't have to be a question. It could be just thoughts too.
Okay, so here's my question. This deferred.
Of course, as luck would have it.
Right there, he paused, but he'll be back, folks. He's in the middle of nowhere, Wyoming, or nowhere, Montana, driving, and so he'll be back in just a second. He'll just gotta get this. Let's see here. Clint, are you there?
All right, you're back.
Did I lose you? I'm here.
Yeah, go again. Just back up 30 seconds and go again.
Okay, I am just wondering how this deferred trust will do during a catastrophic market crash, economy crash.
Okay.
Great question. I'll let Jake take that.
Because part of the reason I asked this is most of the people in crypto are in crypto because they do not trust the banking system. Yet what you're asking us to do is pull all of our money out and put it into a banking system.
Yes. So there's a balancing act there, and there's going to be what we call an investment plan that is flexible. And when I say an investment plan, a lot of our clients that we've been speaking to recently want to reinvest in crypto through their deferred sales trust as well. And so not only will you have access to crypto, marketable securities, real estate, other business interests, but we'll try to balance the ebbs and flows of the market when it goes up, when it goes down. There are proper financial instruments to where you can gain even when the market in the banking system is going down or being stressed. And so that goes back to an earlier comment that sometimes advisors are very laser focused just into one area, and that's all that they're good at, and that's all they advise on. We need to definitely help our clients across all asset classes and bring in other professionals when it's necessary. And so you, being the crypto professional, will have a voice at the table, even though it might be Brett or myself or somebody else actually triggering some of the events within your deferred sales trust. But ideally, you continue to maintain some semblance of your crypto portfolio within the deferred sales trust going forward, so that you can continue to have that diversification and that insulation against the market as a whole. However, we do require that you maintain at least 20%. So of the entire assets, we are only asking from a regulatory standpoint that you maintain 20% in liquid marketable securities that are not terribly volatile. So if there is a market crash, if the banking system becomes stressed, et cetera, as you mentioned, that it only affects at a minimum 20% of your portfolio in the stock market, if that makes sense.
Clint, does that make sense? Could you hear us okay?
Yeah.
Yeah.
Yeah, I could. I service get
His service, he's saying he's apologized. His service is a little off for those who can't hear. And if you're watching on YouTube, it's a little bit spotty, Clint, on the frozen. And if you do turn off your video, sometimes it does give you a little more bandwidth, just FYI. And you can still keep the voice there. But we do, you're looking handsome today, sir. You're looking strong. You're driving. You know, we do like that. So, but that's a little tip. If you turn the video off, the bandwidth could improve. But I also want to add to what Jake said as well. I want to make it very clear that all investments must be approved by you. Okay. So you must approve it. So do the funds move without your approval? No. Are investments made without your approval? No. If you're not comfortable with the investments, are the investments invested? No. Right? So they all must be approved by you. And so we're going to have a conversation. Now, are there some policies and there's some procedures and some stuff that we want to follow? Like Jake said, 20% must be in investment grade securities. Yes. Do they must be approved by you? Yes. Can we dollar cost average into those? Yes. Right. So are they with some of the biggest companies in the world? Microsoft, Amazon, Google, Home Depot, Walmart, Chevron, Exxon, the biggest companies in the world? Yes. And so is it, when you say banking system, you want to clarify, is that in the entire stock market? Is that the banks? And maybe it's a mixture of both. So is there some there that you have to get comfortable with? Yes. But is Jake going to lay out a plan based upon, history of where they've been? Not a guarantee for future results, but yes. Right. So we want to work with you, help you get comfortable with that. Now, the other 80% is pretty flexible. Okay. And that's where my expertise of commercial real estate and investment real estate comes in. I actually have a client, and he sold a $2.6 million business in Alabama, and he deferred $600,000 of tax. And now he's building 70 multifamily units in Tennessee, all ground up development. He's doing it with a partner, and he's really excited about that. And that was his comfort level too, because guess what? A lot of business entrepreneurial real estate folks aren't as excited as well about the stock market, right? And so there's definitely give and take, right? But the overall name of the game is what we want to try to do is diversification, right? Because at any point, the crypto world, as you know, could crash, right? Just like the stock market could crash, just like the real estate market could crash. But if all of our eggs are in one specific one, we can get hurt pretty bad. But if we can spread out some of the eggs, right, and protect, we can do some hard money lending as well as another one that some of my clients like to do. These are all things to lower the risk of everything falling all at once. So, Clint, what do you think about that? Any questions or thoughts on that one?
No, that was great. Thanks for explaining that.
Yeah.
And for the most part, Jake and I have talked a lot about that, and I get that situation. I guess my hesitation is the bank itself that you're wanting us to put our money into.
Yeah, and by the way, we could do a
negative
bank
rate. If negative rates soon exist, you're talking, we put all of our money in this bank account, and all of a sudden we all automatically start losing money.
Yeah, so let's talk about the timing of this, right? So first of all, we do have a special bank that we do use, but oftentimes the funds are only there for a week, right? Like we close on a Monday, the funds are there on Tuesday. Jake already has his investments ready to go. So by Wednesday or Thursday, we've moved it over to those. And then we should be prepared for other investments, right? So it doesn't have.
Okay.
So I guess when you say bank, Clint, are you referring to like the physical bank, or are you also referring to like if Jake's at is it Pershing, Jake, or where are you at?
Charles Schwab.
Charles Schwab. All right. So stocks, bonds, mutual funds. I guess the question is, are you referring to that being the bank, or are you actually just saying the first stop, which is a bank we use in Southern California?
Yeah, correct. The first stop. And
okay.
I did not understand how fast that part was going to move. So you're saying by the time we cash out, we need other avenues in line of where to put the money.
Yeah, so we don't need it, but if you want it, that's what we'd want to do, right? So if you say, hey, Brett, my biggest concern is it's sitting at this bank in Southern California, and what you just said could happen, right? So how do we negate that? Well, we have everything prepared. So we say we already have the account open with Jake Muller, right, for Charles Schwab for those investments, right? And if you say, well, what's the plan with the 80%? I want to go into real estate. I want to do this. I want to do a couple other things. I want to put some of it into an LLC and buy back into some crypto, right? So can we do all of those things? Yes. We just have to prepare and have it all lined up, and then you have to approve those transfers, right? So does that make sense, Clint?
Yep. Okay. Got it.
As long as we have a place to land it in true business investments, that's really what it comes down to. If we have that,
so you're saying it has to go through that account first.
Yes.
Okay. All right. Yep. Perfect. That was my understanding.
Yeah.
Thank you.
So this is, just a little bit more clarity, more of a regulatory requirement. In the United States, because of the Patriot Act, because of a lot of different things, when we can pass dollars through the banking system, it's more of a, hey, these people are not terrorists, everything is clean, everything is legit, but not all banks work very well. That's why we use a very specific bank in Southern California, because they are on the very top of dotting the I's and crossing the T's and acknowledging and going through the steps in a quick fashion. If we did the same transaction with some other banks, even banks that are regional and some that are national, it would be a longer process. That's why we use who we use, because they do everything correct from a regulatory standpoint, and that they are quick in going through their process, so that it allows us to move money from this transaction. And again, we're talking millions and millions and millions of dollars every single month that is flowing through some of these deals. I mean, we occasionally have deals that are $1 million, sometimes deals that are $200+ million, right? Just from various transactions that are occurring that we are protecting through this deferred sales trust. And so we have to have a banking partner, even if it's for a week or less, that helps clarify that all this money that is moving is legitimate money, that it comes from good sources, that it comes from good people, and that then there's no issues with us moving that money into investment accounts and into other assets, and that it's all clean and it's all legit. And that's primarily why we have that quick step in between, is to make all the authorities happy and to make sure that we're following all the legal processes we need to make sure that from an audit trail perspective, we're checking all the boxes we need to for the IRS.
Does that make sense, Clint?
Yep, got it. Thank you.
Yeah, you're welcome. Great question. Any other questions or thoughts that you have right now?
So another one that I was thinking about is, so I've now transferred all of my crypto into business accounts, or from those business accounts is what I'm going to be cashing out in. So Jake, can you explain that process of the trust absorbing those business accounts?
Right. So you now have these other entities, this legal structure, so to speak, these LLCs, that all the money being traded is beneath these LLCs. We need to transfer the shares of those LLCs out of your personal name into the trust with a corresponding promissory note against the shares of those LLCs that then have a corresponding value of the underlying crypto. We need to do that prior to selling out of your underlying coins. I know that you have a variety of different types of crypto and coins underneath. Clint is perhaps one of our most diverse crypto experts, in the sense that it's not just Ethereum, it's not just Bitcoin, it's not just some of these other things. He's got a wide array of coins, and he has done a good job at consolidating those into various digital wallets underneath business entities. And that is perhaps the step that we need to be taking right now, is getting those shares transferred over to a deferred sales trust, so that the underlying assets of those LLCs can be traded, can be sold, so to speak, in a fashion that works cohesive with the strategy. And that's a little bit more complex than what we're trying to do with people in the future. As Brett mentioned, we've got clients that now have accounts and digital wallets set up directly in the name of the Deferred Sales Trust. But in the effort that we've gone through with Clint in consolidating wallets that he had and coins that he had in various places to make the transaction actually easier.
Yeah, and I'll just want to just double. Go ahead, Clint. No, you go ahead.
So I guess that's the step that I'm in right now, is we need to work on getting those businesses, the shares of the businesses, transferred over to the trust. Is that what I'm hearing, Jake?
Yes, and of course, the timing, we like to have time on our side. Ideally, we need to do this before the transaction occurs, that you start selling out of the coins and different things. But if you know that you're going to be doing that here in the near future, we can go ahead and get the trust all formulated and get the shares moved over to the trust and have that exchange take place. I say exchange because moving the assets into the trust, there's a corresponding promissory note against those assets prior to the sale.
Okay, so when I get back, I'll have to contact you and we'll start working on that.
Okay, very good.
That sounds great, Clint. And then I'm going to try to make that simple for those that Clint's been working with Jake and I for 4 or 5 months now. So he does have a basic foundation. So I'm going to try to simplify that. At the end of the day, you don't want to sell or cash out of a coin prior to having the trust established, a brand new trust, only does business with you, okay? And you're actually going to sell it to the trust before or exchange it or send it, transfer it, is probably a better way to put it, to the trust before the trust actually sells it to cash, if that's the way to put it, right? So for example, the Ethereum case, they actually didn't have to do anything on their end as far as the LLC setup. They literally just transferred it to the Deferred Sales Trust. Again, part of it because it's Ethereum, perhaps, and for Clint, if he has some Ethereum, that could be his.
In the stock world, we say transfer in kind,
yeah,
which essentially, as you're saying, we're not liquidating, we're not selling, we're just moving it from one wallet to another.
Right, because realize if you sell it, right, if you sell the coin, like you bought Ethereum at $100 and it's worth $2,000, right, and you're like, oh, bro, I just sold it yesterday, and all the cash is sitting in my wallet, right? That's too late, right? You've received that $2,000 that you bought for, $100. You've received it, right? But instead, if you would have just transferred that $2,000 coin to the trust in exchange for a promissory note, not in exchange for cash, that's where the tax deferral is maintained. Okay, so to keep it real simple, do not sell anything else, especially if it's highly appreciated, until you've talked with us, until we have established the trust. Again, the good news is we do not charge a dime unless and if you actually use the trust, okay, and you actually fund the trust. So nothing is charged, no cost, no obligation. With that being said, guys, we are running out of time. Jake, for our listeners who want to get in touch with you right now, what's the best place for them to find you or contact you?
Very good. I'm rebranding a little bit. So I still have my old information, which is jake@millerfinancial.com, but we now belong to a team of experts, and it is now called AlphaMark. So Jake, J-A-K-E, first letter of my last name, M, at AlphaMark, ALPHAMARK.com. The 800 number is the same, 1-800-773-1848.
Perfect. I want to thank our listeners. I want to thank Clint for the good questions today. And I want to thank you guys for watching or listening to this wherever you're consuming the content, for being a part of the Capital Gains Tax Solutions Mastermind. It's a special series we're doing here, again, on all things cryptocurrency, real estate, investing, and making the Deferred Sales Trust simple so you can sell highly appreciated cryptocurrency, real estate, businesses, really anything of any kind that's highly appreciated, at least $1 million net proceeds, $1 million gain or more, so that you can create and preserve more wealth, not feel trapped by capital gains tax. And we're here to help. We really want to serve you and help you out and see if the Deferred Sales Trust is a great fit. So please contact us right now. You can go to brett@capitalgainstaxsolutions.com. You can email me there, or you can go to capitalgainstaxsolutions.com. Make sure you mention that you saw Jake and I here. And that is all for today. Thank you so much. We'll be back every Friday for the foreseeable future. Lord willing, at 10 a.m. Pacific Standard Time. You are welcome to come. Invite your friends, family, CPA, whoever you need to get comfortable with the Deferred Sales Trust. Thanks, everybody, for listening, and we'll talk again real soon.
Have a great day and drive